Before I introduce my panelists today, let me frame the topic, because I think we're going through an exciting time, I would say, with the blockchain technology. I've been through the blockchain technology the last almost 5 years, during my time at UBS, already implementing first use cases in the blockchain technology. So as blockchain technology is now, from my perspective, coming through, especially in the enterprise business, in the global payment business, in the trade finance business, we will see a lot of cases this year going into production, and there's a lot of juice out there. There are predictions from certain various consultants that we're talking about 100 billion plus efficiency gain in financial service industry. That's a lot. We see also that cryptocurrency and Bitcoin is raising from a value perspective. In 2016, we had a market capitalization of $20 billion in cryptocurrencies. Last year, almost, we were, I think, 700, 800 billion before the crash, beginning of the year.
810 to now 540.
540.
Still over 540, half a trillion.
So it's a huge increase, I would say. And the question will be, looking also at the venture capital business and our traditional or new crypto asset manager coming in and will increase the demand like EFTs. Then the next question is, it's not only technology, it will change maybe, and it's also a question for today, changing business models of companies, new market structure will come up, new ecosystem. Is there something that is of interest for the venture capital business? And last but not least, it's all about, as a first use case in blockchain technology, is the initial coin offerings. So a way to get funding, especially for blockchain startups. Last year, over 4.6 billion in capital raised, 5 times higher than equity funding. 500 ICOs being through, so there's a new way of funding for startups to almost bypassing the venture capital business. So that's a good starting point, and I would like to introduce our panel, ask them to introduce themselves and also explain a little bit in which kind of blockchain and cryptocurrency startups are you invested. We have Melton. She is the director of business development at one of the biggest venture capital firms in the blockchain arena, which is the Digital Currency Group. Melton, if you want to introduce yourself.
Yes, sure. Good morning. Pleasure to be here. So Digital Currency Group, the idea we started with back in 2015 was this idea that digital currencies, at that time really we were heavily focused on Bitcoin, and obviously that's evolved quite a bit over the last few years. But the idea is that digital currencies represented a new asset class, but also a new technology paradigm. And so our focus was creating a multi-asset investing strategy where we built subsidiaries, we built actual operating companies. So we're a corporation, we're not a fund. We wanted to have long-term capital. We didn't want to be stuck with the 10-year venture timeline, which I'm sure we can dig into a bit. But we have 3 operating subsidiaries. We have a licensed broker-dealer. We have a product business called Grayscale that creates cryptocurrency-focused ETFs. So the first ETF we created was the Bitcoin Investment Trust. It has 2.5 billion in assets under management. We also have an Ethereum Classic and a Zcash Trust, and we're launching 4 more products this year. And then we also own CoinDesk, which is a media events and research platform. Then on top of that, we also invest in startups. So we've invested in over 110 companies across 30 different countries, all of which leverage digital currencies or blockchain technology in some way. What's interesting is over the last year, we've also begun investing in startups, not just through traditional equity funding, but through tokens. And actually, over a third of our portfolio of 110 companies have now done ICOs. So I spend most of my time working with our portfolio. I manage all of our portfolio companies for us. And it's been an interesting dynamic to watch the relationship shift from owning equity in a company, having a traditional relationship that a venture firm might have with an entrepreneur, to now also holding tokens. And it creates really interesting issues around incentive alignment. And then now we even have some investments that are purely token investments. And so one of the things I would love to talk about is, as a venture firm, as an investor, when you have an equity investment, there's obviously a long-term incentive to work together. But if you invest in a token and say that token goes up 20 times in price, and maybe you decide to liquidate the token, what do you do with that relationship? Do you go to the founder of that project and say, hey, it's been fun, thank you, I'll see you later? So it's creating a really interesting dialogue, and I know Albert and I have spent some time chatting about this as well. What do we do? So I also brought a special shirt. So this is my special shirt. I will wear it.
So venture capital is dead?
This is my challenge today.
So not dead yet.
The hybrid model. Okay, Albert, if you want to introduce yourself and explain a little bit about the blockchain portfolio of Union Square Ventures.
Sure. So I'm one of the partners at Union Square Ventures in New York. We have investments in companies like Protocol Labs, which did the Filecoin ICO and is building Filecoin, which is a protocol for decentralized data storage. We're investors in Blockstack, which also sold some of their Stack token. They're building a system for end-user control of computation and end-user control of data and end-user identity. We're investors in OB1, which does the Open Bazaar protocol. We're investors in Coinbase, which is the largest brokerage in the US and increasingly also globally for cryptocurrencies, in particular for Bitcoin, Ethereum, Litecoin. And we've made a couple more investments that haven't been announced yet. So we've taken a more focused, smaller portfolio approach, which is in keeping with how we've invested historically in other sectors.
Mm-hmm. You know, especially with Open Bazaar, there will be a new business model. Or it's already a new business model, how they operate. You know, if you look back 20 years ago, with Facebook, Google coming up with a very centralized model. That means there's a middleman doing the relationship and the exchange of businesses, information and transaction. Open Bazaar is peer-to-peer. Do you see more and more of this kind of change of business model into centralized into decentralized business model? Because I've been through this with a lot of boards and executives now. Do you see this discussion coming up more and more?
Well, so I think the central question on all of these is, and this is why there's been this proliferation of tokens, right, is if you have a truly decentralized system, how can you capture any value? And the idea is that somehow the token is integral to the usage of the system, and then you retain some portion of those tokens as they become valuable. You are capturing some amount of the economic value creation in the system. I think the reality is that there's a lot of tokens out there that aren't integral to the systems, and I think people are hustling to try and figure out how to make their token integral to a system, and many tokens haven't even launched the actual system that they've raised money for. So I think we are, in skiing terms, we're well out front over our skis, and so it's just a question of whether we're going to hit some bump here at the wrong angle, which will send everything flying. I don't know. Who skis? This may not have been the best metaphor.
But going back to business models, Malcolm, we see that blockchain together with IoT setting up new ecosystems. Like Mercedes is setting up a mobility ecosystem that you can book your trip from Munich to New York, train, car, etc. through those kind of new technology. From my perspective, and there are prediction out there is a new 12 new ecosystem building up over 170 trillion of new business. So do you think that's real? With 110 blockchain companies, or is it just the hype about using technology and hopefully we'll see something meaningful coming out of that?
So I think, yes, it is real, but the use of the term real it's an interesting word choice. I think what's happening is, from my observation at least, having worked with these companies for the last 3 years now, is we're at the very starting stages, of a paradigm shift in the way that people think about value and in the way that technology in our world works. And so what I compare it to, I was not an investor in the internet boom, Albert was, so it's been interesting to learn from him. But just thinking through what happened with the internet, that was an innovation in information transfer, and blockchain technology is an innovation in value transfer. And so the first killer application is this idea of digital money. So Bitcoin, to me, is really the first killer application of blockchain technology. And to me, the entire application ecosystem is still very early because we're not even done building the protocols yet, right? Some of these projects are just the very early stages of defining the protocols of how value transfer, file transfer in the case of Filecoin, data storage, namespacing, et cetera, how all of this will work. Then on top of that, we have to build the networking infrastructure. So there's a lot of capital expenditure that needs to happen, not just for Bitcoin mining, for proof of work consensus algorithms, but for proof of stake. And what do different and new consensus algorithms look like? And how do we create truly distributed networks? Because I would argue that most tokens and most of these blockchains today are not decentralized at all. They're highly, highly centralized. And so the question is, how do we build the protocols? How do we build the networking tools and the networking layer and distribute these networks widely? And then on top of that, we start to build applications that can intersect with other disruptive technologies like IoT, or now there's a new project, the Ocean Protocol from Berlin, actually, and they're working on creating a data marketplace, for example, to enable people to buy and sell data using a token. So I think it's just going to take a long time, and there will be many mistakes along the way. I think everyone's learning. That's what I love, is every day I am wrong about something.
What do you think, mainstream 2025 or next year, this year? What's your prediction?
You know what, I'll probably be wrong, but I think by this year we'll see some sort of decentralized protocol deployed at scale, and probably 2020, maybe we'll see 1 or 2 applications. But I think we've yet to find a killer app that transcends the value transfer sort of use case. And I think for now, Bitcoin is an important sort of innovation. It continues to be the one that's most widely used.
So Melton pointed out that I'm old.
No,
it's a good point. So I do think we're somewhere like 1999, right? So everybody talks about all the amazing things that are happening, and if you keep talking to the same group of people, we're all super excited. But when you look at sort of the actual usage, even when you look at trading volumes of tokens today, it's all speculative trading volume. It's not tokens being traded because I need the token to go buy the service. I'm buying the token because I think it's going to be, worth 5x more like 6 days from now. So, I think it's simultaneously true that I'm extremely bullish about the long-term prospect, and that I also think that we are way, way, way ahead of any real usage in terms of the valuations we're seeing in the market today. So, and the fact is, this is what's called a rational bubble, and we've had these rational bubbles at every big technology junction. We had them in railroads, we had them, in the dot-com bubble. If you follow additive manufacturing, there was a massive 3D printing bubble. And these bubbles are rational in the sense that they bring a lot of capital to a sector. Many, many projects get started, and then out of these many, many projects come a few that actually matter. If you think about what came out of the dot-com bubble, there were tons of companies that were valued at billions of dollars. I think the peak market cap was close to $3 trillion of all the dot-com companies. But then you can count the number of really important companies on 1 or 2 hands. So, it's Amazon's, eBay's, PayPal's, and so forth. So I personally think the same is going to be true here. When the dust settles, I believe there'll be a few protocols that will be truly transformative, but there won't be 1,000 transformative protocols in the world.
So what you're saying is right now cryptocurrency is a high-risk asset class, or do you think it's overall a bubble?
I think it's a casino.
I love gambling.
So Melton, what do you think? It's just gambling, or do you think those companies are really building value and a revenue stream going forward?
Sure. I think this is an interesting question. I think one of experiments I always like to play when I go to events or conferences, I ask people, what tokens are you invested in? And they'll give me a list of 10 names. And then I'll ask, okay, this particular token, what does it do? I don't know. So I think a lot of people have seen what's happened with Bitcoin and Ethereum, which are 2 protocols that have really taken off, that are starting to see applications and actual utility being built on top of them. They've seen people who've invested early in Bitcoin and Ethereum have seen considerable price appreciation, and they've created wealth. And I think probably everyone in my age group has someone in their friend group who's become extremely wealthy from investing early on in digital currencies. And I think to a lot of people, there's this appeal to thinking about, oh, well, if I'm the first in this new token and this new one and this new one, then I can replicate this effect. So in a way, it is like a casino, and everyone's trying to find the next big token, and part of it is driven by this irrational bubbliness of it. But I think at the same time, it's also, I see it as different from the internet boom, because everyone who gets into cryptocurrencies, everyone who learns about Bitcoin, I've never met a person who's learned about it and said, yeah, you know what, it's interesting, but not for me. Everyone dives down this sort of rabbit hole and becomes fascinated, not just by the tokens, but by the concepts, the social, economic, and political concepts that digital currencies and distributed networks are supposed to represent. And one of the big failings of the internet and our web architecture is there's no payment technology embedded in it, right? It's the constant friction of having to enter in your credit card information and all of these clunky payment systems we have. So I think, yes, there's a lot of speculative greed going on here, but there's also a fundamental shift happening in the way that people think about technology and the role that companies play. And if you're not paying for a product, you are the product, right? So if you use Facebook, if you use Google, you are the product, you are how they make money. And I think when people learn about digital currencies, they start to ask, well, how do we change these paradigms? How do we change these power structures? So I do think there's a lot of positive potential here as well.
And looking at investors, especially now, I think institutional investors, family offices are very keen on investing in those startups. And as banks are not open for business, they try to stay away from any crypto business, just only using blockchain for their own use cases. Do you see more demand coming in, and do you think that the business, investing in those tokens is ready to for production? Because at the end we're talking about getting access to like a Bitcoin, like a token, and we're talking about millions of investments. A little bit scary for an institutional investor to now store their keys in their wallets, etc. And so what do you think is even now the institutional business getting ready?
Yes, so I spend a lot of time working with our corporate partners around digital currency groups. So we have banks and insurance companies and payments companies like Western Union and MasterCard as our investors. And what's interesting is 2 years ago, they said, you know what, we're not interested in this Bitcoin thing, but this blockchain thing, this is great. And now they're coming back and they're saying, actually, tell us more about Bitcoin and digital currencies. Tell us about how Ripple works. And so, going up and down Wall Street, I'm in New York, so I spend a lot of time with the banks. Every major bank, every major family office is asking, I have clients coming to me. People are calling our brokerage business and they're asking for exposure to digital currencies. We can no longer afford to say no, but also we're co-investors in Coinbase. You look at the numbers that Coinbase is putting up, how much revenue they're making on a monthly basis. You go into any bank and you show them those numbers and they start to ask, how do we do this? We need this type of growth. So I definitely think 2018 is the year when we're going to see several large financial institutions start to interact with digital currencies directly. And I think it will be good because hopefully it'll bring some new best practices to the market, stability, security. Hopefully we'll see some custodial solutions. So
Albert, if an institutional investor knocks at your door and say, you want to invest in cryptocurrency, blockchain-related company, you say, this is a bubble, we'll not recommend you do it?
No, I mean, here's the thing about these rational bubbles, is you never know when they're going to end. And I think you just have to be smart about how you invest in them, which means you can't have 100% of your net worth tied up in them, because then when they collapse, your net worth decreases dramatically. So I think you need to have exposure to them, but you need to keep a lot of dry powder, because there will be not just one, but multiple corrections, and most likely one very large one. And at that point, you want to be able to be a net buyer, not a seller. So I don't, this isn't about avoiding the sector. This is just about applying some rationality to it. And again, the sort of muscle memory, I think, from the .com bubble actually does serve quite well, right? We all, well, who are old enough, remember that there was this time when these public companies would add, .com to their name, and their stock price would go up, like 100%. And
now we have blockchain.
And now companies add blockchain, and they're stuff. I mean, those are indications that things are not quite right, And so,
So what you're saying, a portfolio approach, mixing the right asset
it means
class?
You need to have an anti-fragile investment strategy. An
Yeah.
anti-fragile investment strategy means you have to have dry powder. Now, ideally, if you were early to the sector, you can take some money off the table, and so your dry powder can actually be realized gains. That's, I think, the smartest strategy. But if you're new to the sector, don't right now rush all in.
Do you see where you're looking at your portfolio, blockchain portfolio, and the same question also, some company that has a really a unicorn potential? I'm not talking about unicorn from a cryptocurrency market cap. I'm talking about revenue, real revenue. Is there some companies out there that you believe that?
I think revenue is the wrong metric, right? Because revenue is a good metric for a company like Coinbase, but it's not a good metric for a system like OpenBazaar or Filecoin or Blockstack or any of those systems, frankly. For them, the metric is, how much activity is there in their system? Like, is their token being used by people? And I think if you look at that metric, almost all of these systems are super crazy early. I think there are very few of them that have any actual usage of their tokens.
Is it OpenBazaar as a
OpenBazaar
eBay
OpenBazaar actually doesn't have a token, so
I think they announced. No?
They will have one, November, but it doesn't have one today.
Well, no, it's funny. So we're also co-investors in OpenBazaar. Last May when the ICO boom started taking off, I think the CEO of OpenBazaar, Ryan Hoffman, who's hilarious, you should follow him on Twitter. He plays this great game called Pick a Effing Coin, and every day he invests in a different altcoin. It's very funny. But he came out in May of 2017 and he said, ICOs are insane. We're never going to do an ICO because Bitcoin works great. And I think what's happened since then, now they are doing a token sale. I think all of these new business models that are emerging that are using tokens, not in a rent-seeking way. I do think that 90% plus of tokens are rent-seeking. They just add an extra layer of friction and people are charging to be the gatekeepers. But I think in certain circumstances, people are trying to ask, well, if we create a decentralized or distributed marketplace, is there actually benefit in having a token that isn't Bitcoin?
I wanted to come back briefly to this original question about ICOs versus venture capital. And I do think one of the great pushes of the sort of digital technology overall is that it tends to result in unbundling and rebundling. And so it's a good question to ask, what does venture capital bundle? And the bundle in venture capital really is money, advice, governance. And so I think one of the big questions to ask is, how does that, in this potentially new world, get unbundled and rebundled? And so I do think that the advice and governance portions are relevant parts of venture capital. At least that's what we like to tell ourselves as VCs. But I think we are already seeing, for instance, how important the governance portion is, right? So some of these projects, including some that we're involved with, have raised hundreds of millions of dollars. And somebody's got to make decisions about how to allocate that capital. And that becomes a governance question. And now there are really interesting ideas for on-chain governance, for voting. Obviously, that was an idea behind the DAO, which blew up spectacularly. So I think there are lots of interesting ideas in the room, but we haven't actually implemented any of them. And so in the absence of having really successful on-chain governance with voting, we need a few small groups of people to get together and make decisions. And that's usually where you want some people in the room who represent different perspectives. And venture capital can provide one of those, by all means not the only one. I think good governance will have lots of people from the community and so forth involved. But we need to solve that governance question. And venture capital is one model. It's not the only model.
So looking at your shirt, Alfim, do we need Albert and the venture capital business going forward?
So I just want to say two things about why I think venture is changing. So one is incentive alignment, and venture capital, to Albert's point, the way I characterize what we do at Digital Currency Group is we deploy three types of capital: financial capital, human capital, and social capital. And really today, if we look at the way that VCs are sort of glorified. We talk more about VCs than we talk about entrepreneurs. And VCs are allocators of capital, right? As a venture capitalist, your job is to take other people's capital and to deploy it in a way that is hopefully going to generate a great return for your investors, but also to minimize risk through diversifying and by leveraging your experience and your perspective in constructing a portfolio. But what I always think about, and having been a failed entrepreneur, I'm horrible at it, I've failed many times, I think we need to readjust the power structure in how venture works, the relationship between entrepreneurs, early employees. Right now, the only people who make money are the VCs and the founders. And you think about people who work at startups, it's 7, 8, 10 really difficult, really painful years, and no one walks away with anything except for a very small group of people. And I just don't believe that model. I don't want to participate in that system. So I think something is changing, and tokenization is part of that. Crowdfunding failed, so tokens may present a mechanism to enable us to do some of that. I think the second piece, and why I like to wear this shirt, is I also think liquidity is the big question, right? So one of the reasons DCG is a corporation and not a fund is we didn't want to have this pressure to return capital. And I think a lot of times the alignment of incentives between an investor and a founder can sort of be tense, because an investor has pressure to deliver returns and a founder has a vision that they're trying to execute. And sometimes those incentives are very different. And that's not to say that in the world of tokens you don't have incentive alignment issues, because clearly you do. But what we're seeing is people are willing to pay a premium for liquidity. So if I no longer have to be locked up in an equity investment for 5, 10 years, if I can have liquidity, and maybe it's a hybrid model where it's not all liquid, but I do think there are new ideas that are emerging about what liquidity could mean for founders, for early employees, for early supporters. And also, entrepreneurs don't necessarily, venture firms, we hope at best that we don't F it up. But do we really add value? I'm not convinced.
The frustration that...
I'm not sure.
We do.
There's another frustration level, I have to say that. Even established startups that already raised 30, 40 million in the past, they're saying to me, Oliver, we spend 50% of the executive time per year to figure out, to raise funding, and talking to venture capital firms who could be a good match, culture-wise, etc. And then you have an ongoing discussion about voting rights. So there's a huge frustration out there. And so even established players that have access to VC capital, they're now going into the ICO way because they see a better access to a global pool of capital, and they can do this in a more efficient way. What do you think about that?
Yeah, no, I mean, I completely agree that the idea of creating a global capital market and creating a modern, digitally native capital market is a really, really important innovation, right? So I think one of the problems we have today, for instance, in the United States, is that the number of public companies has been dropping precipitously. It's very expensive to go list, and many of the companies that do get listed get acquired and consolidated. I think that one of the mistakes we're presently making in many parts of the world is that regulators are applying existing regulatory frameworks, and they're trying to fit this new thing into an existing drawer that they have. So, it's a currency or it's a security. I do think we need a new regulatory framework, and that regulatory framework also ought to account for the fact, which Meltem just mentioned, of liquidity. So my personal desire would be for us to have regulation that goes around transparency. So if you meet certain transparency requirements, whether you are a crypto project or just a corporation, if you meet certain transparency requirements, meaning you publish a lot of data about yourself and you publish it maybe even continuously or at very high frequency intervals, you ought to be able to have public currency, public shares. And so we should change the demarcation line from do you pass these fairly arbitrary criteria that we had set in the past to how much data do you make available about yourself. If it's a lot of data, you can be public or you can have tokens. If it's very little data, you should be able to sell only to accredited investors or have other protections in place.
Are we, assuming you're both saying, ICO will stay, it's like a new form of funding in a digital way. Do you think with the Telegram announcement. Telegram is a WhatsApp competition saying they're doing ICO, they're going for $2 billion, and they have already 830 million capital raised in a private sale. Are we moving into IPO 2.0? That means we use ICO as a digital platform and bring more the experienced investment banking boutiques in there, applying best practice from a regulation perspective, but instead of paying 10 million for an IPO, cost-wise, you can do it then less than $1 million. Do you think we are morphing into a 2.0 IPO business?
I don't know that I would find it to be analogous to IPOs. I think, and instead of using the term ICO, I just like to think of it as tokenization. I think we're entering into a new stage. I work with a lot of publicly traded companies. I work with large privately held companies, and all of them are looking at what's happening in the crypto world, and they're saying, maybe we should do this. And so I think we're going to see more and more businesses who have natural networks around them start to inject tokenization in this concept of a security or an asset or a token of some sort that can be on a transparent, public, globally distributed ledger into their business models. But I do think that this weird, I think Albert said it well, this weird idea that we have only these limited boxes that companies can fit into, we're starting to challenge that paradigm. So I don't know where it fits. I think there are many different places where ICOs or tokenization could be relevant, but I think everyone who runs a company who is managing assets is looking at this and saying, this is interesting. What can I do with this? And so there's a tremendous demand for knowledge, for services, because this is such a new, interesting paradigm. So I think it's going to be fun. It's like being in the Wild West.
I think we have still time for a question, around 5 minutes, so we want to open up to the audience. I think we have the first question over there. If we can bring the mic over there.
Just yell.
Maybe it's live streaming, so.
They're civilized.
Yes.
Hi, good afternoon. I'm René Seifert from Dataflow. I just launched a blockchain application for documents 2 weeks ago on Ethereum. My question is less about the financial or capital aspect of the blockchain, but more of where do you see the inherent use cases where the blockchain has an advantage due to censorship resistance and all these things. Vitalik Buterin, the founder of Ethereum, said, unless there is a 10x improvement over an existing use case, hardly anybody will switch. So what are your thoughts about that?
So I always apply a few questions. What I always ask is there a process that's repeated? So if it's a one-time process, probably blockchain doesn't make sense. But there's a process you're repeating. Can you digitize it using blockchain? Are there multiple stakeholders involved in a process that may not necessarily trust one another? Is there value transfer associated with that process? I think that lends itself really well to blockchain application because you can embed programmable money into that particular use case. So I think you can ask yourself a few key questions. But at the end of the day, does it really matter? I mean, we see people doing everything with a blockchain. I think it's become this sort of buzzword. And I think we're also learning that blockchains are actually incredibly expensive. Right? The Bitcoin blockchain, the Ethereum blockchain, they're very expensive to maintain and run, and it's for a reason, because security costs money. But I think you can start to ask yourself, is there a case in which people are willing to pay a premium for security and trust? And I think those are the types of use cases we're using. I'm more of a believer in public blockchains, not private, but I think that's where it does make sense. I don't know if you have
Yeah, I mean, you mentioned the word censorship resistance. I do think that the applications that will slowly grow are all the applications where there's some reason to be afraid of somebody big. Somebody big could be the government. So this is the preeminent application of Bitcoin today is capital flight, right, from countries that have capital controls. Then you can think about areas where you have a dominant market player like Facebook or an Amazon, where people want to build things that cannot easily be attacked. So if you think about, for instance, the messenger market today, if you want to have a messenger that could be long-term self-sustaining and cannot be attacked by one of the big players, you need to figure out a way to finance that system that's different than, say, ads. So I think we're going to see applications in areas where there are dominant players that can exercise a lot of power. What the initial breakthrough application will be that really drives broad mass adoption, I really don't know. It's the kind of thing that I think we can only speculate about, but will be kind of obvious in the aftermath.
Now, let me summarize the session. I think blockchain and cryptocurrency will here to stay. I think there will be opportunities for the investment and capital venture community. With the new business models coming up, it will have an impact already on the venture capital market, the structure. I think through the democratization of access to capital through ICOs, there is an impact already. How this will play out like a hybrid model, combined, etc., we'll see, but I think there's much more to come. So thank you so much.
We should repeat this next year and see what we got to.
We'll
thank you so much, Martin and Albert. Thank you. Thank you.